Well, after one extraordinary year, what are the chances we have another one? Let's look at some of the charts that we might be talking about over the course of the next 12 months, starting with this one. We're already talking about it, actually, aren't we? Gas prices. This is wholesale gas prices, feeds into our bills eventually. But here's something interesting. You might have noticed this, because we reported on it. The UK's gas prices, wholesale gas prices, actually, for much of 2022, were lower than the prices that you saw in North Europe. But here's what's interesting. We might, over the course of the next few months, see that reversing. So the UK may have to pay higher prices for gas, higher wholesale prices for gas, feeds into the prices for all of the rest of us than Europe. Why? Because we have less storage. And if it gets cold, you kind of need that storage. So that's one thing to look out for, as is this. Waiting lists, NHS waiting lists, that they've been creeping up in 2022. You can see them by different lengths of time that people have been waiting, up to over 7 million in total in the third quarter of 2022. Now, here's the bad news. That is expected. That mountain's expected to get even higher over 2023, and it may not even peak until 2024. So we're still likely to be talking about a crisis in the NHS for that and for many other reasons, unfortunately, for quite some time. Now, the next thing, it's a slightly complicated chart, but it really matters because what have we learnt from 2022? It is that the gilts market, where the government borrows, where it issues those bonds, those IOUs, it's really important. It feeds into our lives. And this is just showing you, these bars are basically showing how much debt the government is issuing. So anything above the line is then basically borrowing money, issuing IOUs. But here's what's interesting. The Bank of England recently, up until recently, has been buying a lot of that debt. I'm going to show you these light blue bars. That's what the Bank of England has been buying. But as of, well, where we are right now, and certainly the next few years, that's gone into reverse, and they are selling all of that debt back. It's called quantitative tightening. It was QE, quantitative easing, before. Now it's quantitative tightening. But the upshot of all of this, look, if we net those two things off, so we add them up, you see that red line. That's what the government, what the private market is having to absorb. All those pension funds, all those insurance funds, they have to absorb an enormous amount of money flowing into the market over the next few years. No one knows if they're going to be able to do that. So that is a big thing to look out for, as is this. Of course, it has a bearing on what's happening with interest rates. This is showing you expectations for Bank of England interest rate. We're looking back to February 2022. And remember, I mean, it feels like not that long ago, but of course, people thought interest rates weren't going up above maybe 1.5% back then. Then you had the new government coming in. They thought, well, they're going to spend more money, so that's going up. Then you had the mini budget. Remember that. They thought, wow, it's going to peak at 6.4%. But then things since then have calmed down a bit. And now investors think interest rates are going to peak at 4.5%. Will that be the case? Will that be the peak? Will it be a little bit lower? We'll find out soon. It will be quite a year, though. Many charts, many issues, whether it's health, whether it's the economy, to bring you in the coming months.